feel like Do you ever feel like you're doing everything right in your business? Revenues grow, the team is expanding, your personal income is flat, your time's maxed out and stress is climbing? Well, you're not alone. I've seen this pattern over and over again, especially in businesses stuck between 500,000 and 2 million. The truth is hard work isn't the problem. The real issue is solving this simple, hidden, but in plain sight business equation. Almost no one talks about it, but once you understand it, scaling gets clearer, it gets faster, and way more predictable. So today, I'm going to walk you through the perfect scaling equation. It's a simple but powerful model that breaks down why most businesses stall and exactly how to unlock scalable, sustainable profit. So let's get into it. If you don't know, my name is Zoe. I am an owner of a fractional CFO firm called Zopia. And what we do is really just bring clear CFO insights to where you are to help you get from where you are to where you're going. And we want to talk about this perfect scaling equation. This equation, what it is super simple. It's the offer minus fulfillment minus management equals profit. So most entrepreneurs, they blindly just walk through and build their business without understanding that no matter what they do, no matter the skill set that they bring into the business, that this equation is at play. It doesn't matter how large your business is, how big your business is, what industry it is in. This equation is essential. It must be in balance and it must be working in your favor. So it's the offer minus fulfillment minus management equals profit. So what I want to do is break that down and dive deeper into each component. So the offer, right? In fact, the understanding, to help you understand even better, let's talk about each portion of this equation as a department. So let's say the offer department. What do you find in the offer department? You find that that is the place where sales, marketing, branding, image, communication, all these cool things that are out facing show up in this department. This is where the sales come in. This is the dollars that are maximized in this department. The purpose of this department is to communicate to the marketplace your value, the value of the organization and the business. But after the offer department, after everyone has come through the door and said, hey, we do want to work with you, or we definitely want to buy the product that you're selling, what comes next? It's the fulfillment department. Now, the fulfillment department is actually where you keep the promises. It's where you actually deliver upon what the offer department told the marketplace. Imagine if your fulfillment fell short of what the offer department promised. That's putting your reputation at risk. All right. Not only are you to deliver the product, but you need to deliver it or fulfill it greater than the value that it was actually presented at. That's actually the goal. And then the third department we'll talk about is the management department. That's really where you understand how to deploy the excess funds that come out of the fulfillment department's efficiency. Now, all those departments working together seamlessly, serving one another in their respective roles, produces the daddy of them all, the profit department, right? Now, I know you probably didn't think the profit was a department, but you as the business owner are the leader of the profit department. And depending on what you do with the profits will dictate where your business will end up in the future. Now, one thing I find that's interesting is that in each department, there is a leader. There's a distinct leader in each of the departments. You already know it instinctively. You just don't always think about it. If you're a solo owner, you're wearing all of these hats. If you've expanded a bit, you have few employees and you have directors, you may have allocated this hat to create some of those departments. The leader of your offer department is the person we all know. It's your CEO. They're the brand, they're the leadership. They're the ones who say we're going in this direction for the whole business. They take on ownership of the revenue generation. And then who leads the fulfillment department? The COO, the Chief Operating Officer. That's the person who understands how everything takes to actually deliver upon those requests. And then my favorite department, the management department. Who leads that? You know, tell me. The CFO, the Chief Financial Officer. That's the department, that's the leader that's going to help you to be diligent, to manage and to deploy your resources in an effective manner to do what? To serve all of the other departments. You serve multiple departments. The management department is actually one of the most important departments that's often overlooked because the results of the management department produces a profit or it produces reinvestment into the other departments. One of the things, as I was thinking about this concept, one of the things um, that came to mind, right, is is when an owner comes to the table and starts a business, right? You have different types of owners who excel in different gifts, and those gifts, those skill sets, can be aligned in each of these departments. You need at least one to be audacious, but you need at least two to even start a business. But you need all three to scale. You need all three working in sync to scale. So let's talk about an owner. What happens when an owner is an offer department style owner? What are some of the strengths? What are some of the weaknesses? Typically, we've seen that when owners who are great at sales, great at branding, they look great on camera, they talk to you real nice. Sometimes they, drop the ball on fulfillment. What does that do? We think of those people as hyper salespeople who lie to us, who tell us this bottle of water is worth $30, but we all know we can buy it at Aldi or at Safeway, right? They tell you the drink of life is going to restore your life, but then they may fail on the fulfillment and actually doesn't do it. So the reputation could be lost. Let's say you're an owner and you're not that salesperson. You're not that offery, that person that loves to get on camera. Usually we've seen this. This is an owner who is very skilled at their delivery. Maybe they're an artist. Maybe they're a plumber. Maybe they're a lawyer that loves the law, an accountant that loves taxes, and they don't necessarily love all the other stuff. All right. They're like the best kept secret. They do a great job, but you just cannot find them. Like you need to find the referral of the referral of the referral person to actually get to find them and get their services, even though they're great, right? But in business, you can't be the great person under the rock. Your business cannot be the greatest kept, best kept secret. You're actually depressing your value. What if the owner was only a management type of owner? They were great with numbers, but they sucked at offers and they weren't that great at fulfillment. What's their strengths and what are some of their weaknesses? They're great at looking at doing the math and looking at the equations and probably making decisions. But the actual act of actually doing and executing, oh man, if you can't do that, you can talk about all the plans and strategy, but you don't actually do it. There's a weakness there. Where will your business run? So I say you need at least two of these departments working on the inside of you as the founder to even get started in your business. You need three of these departments to be humming together in sync for your business to actually scale to a place that you desire it to be, right? So what happens when you have two of those things? You're able to send the offer, deliver on the offer, and also promote the offer. So that's pretty much what I wanted to talk about. It's not much, right? That's just a core concept. If you understand this equation, like when someone asks you when you look at your own business and you're like, what do I have to do to get to that next level? Oftentimes it's the simple equations that solve the most complex problems. Offer minus fulfillment minus management equals profit. What happens? I feel like I'm getting a lot of revenue, but there's no money ending up in my bank account at the end of the day. Maybe your fulfillment actually costs too much. And now your management department needs to talk to fulfillment to reduce the cost. Maybe fulfillment is as efficient as it humanly is possible, even with AI. So perhaps it's a matter of no, we need to reinvest back into offer department to increase our rates, our prices, our top end, so we can actually build some profit. Right. So this is it's a very simple equation. It's often not talked about, it's often overlooked because it's so simple. It's too simple to even remember at times. But it is the fundamental equation that's going to support your business and help you scale. Now, I do want to talk about two things. There are two departments that are unique, that are not hidden. They're hidden. They're not even obvious in the core equation that we just talked about. Can anybody tell me what that is? I'm not waiting for you. I'm going to tell you. Are you ready? The two departments that these two departments, when you apply them, no matter what stage you are, they will absolutely multiply the effects of your business. They'll multiply your scale, and it's not even close. They'll multiply exponentially, and there's a point in which your business grows where these two departments no longer become hidden. They become they're in the forefront, and they're actually expected and required for you to actually make an impact in the marketplace. What are those? One, it's the HR department. Yeah, the people department. Second is the tech department, aka the AI department, right? That's where the tech department has been rebranded to AI, the AI department. So if you think of it as algebra, I don't know how many of you do algebra anymore, since the 5th grade or 6th grade when we did algebra, but this equation is an algebraic equation. We take the offer minus fulfillment minus management, and what we do, we put a bracket around that. And then what we do, we multiply that by the people department and the AI department. And what does that do to the overall equation? You're no longer adding, you're now adding through multiplication, because your business is hinged on how good the people are in the business, their skill set, and on the additional capabilities of the technology that enhances those people. I like to call this the 3 Ps: people who work the process and are empowered by the platform. A platform is a software. This is a key on scaling any department or multiplying the effects of the department. When you have processes in place that are systematic, you have people managing those processes, and then you have software or platforms enhancing their output ability, you are essentially multiplying every department in this scaling equation. So what I want you to do, we're coming to the end. All I want you to know is that sometimes solving the most complex equations or complex problems for scaling come through simple equations. Offer minus fulfillment minus management, sometimes multiplied by HR and AI, equals profit. Awesome. All right, so now thank you for listening. Definitely want to just shift over to just opening questions. Welcome to the ZFO office hours. Yeah, so welcome to ZFO office hours. All we're doing is just opening up this environment, this space for all of you business owners. I have people maybe coming in from different communities. If you follow me on LinkedIn, if you follow me on Instagram, or you follow me on YouTube, subscribe to the YouTube channel, or you follow me on where else? The owners community. I actually just joined a community of business owners. And I just open this up just so that we can answer and ask and talk about some of your pertinent problems when you're growing your business. Oftentimes, trying to speak with a CFO or CPA is behind a paywall. You got to pay them. You gotta pay them the hourly rate. You know they're worth it, but it's like, man, just to ask a question, right? I know that feeling. However, This is why this is available. So I am wanting to check the chat, look at some questions that people have posted. I had if this is the first time you're actually seeing this, right? You may have not posted your questions or submitted it early on. Um, but if you did, send them through the type form or post them in the chat. But I'm just gonna read off of some, and we're gonna have a conversation. Is that cool? Is that all right? Nice. I love the connections on the chat. Okay, Patrick. All right, all right. Let me see if anybody's in the Zoom. Okay. If you don't know, there is an exclusive Zoom room that you can hop on even live, but that's only exclusive. I might have to pay charge you to join it. Wink wink. But yeah, so let's ask this question. I have a question that says here that says, I'm a business owner. How can I improve my cash flow when I'm profitable but still feel strapped for cash? That's a good question. It's a very good question. How can I improve my cash flow when I'm profitable but I still feel strapped for cash? Now, in order to ask this question, answer this, sometimes there's nuance and specifics that I need to know. But when I think about the differences between profits and the differences between cash, it's I think about the fact that they do not move in the same direction. Like profits, cash, you would think that they're the same thing. Like most people who start their businesses, who are scaling their businesses, think that, oh, if I'm profitable, the bank account is full. That's far from the case, especially depending on what type of business you're in. Did you know your business has four major financial statements? Most people don't know that. Only their accountants know it because all they really care about is going out there and creating something cool. But there are four financial statements that tell different stories. And if you understand the stories that these statements tell, then you would know, okay, where's my profit coming? Why isn't it landing in my bank account? Why does my tax guy say I owe taxes on my profits, but there's no cash in the account? I'm gonna tell you why. Your profits are going to show up on what we call the income statement. That's your profit and loss statement. It shows the summary of your revenue, summary of your expenses, easiest equation in the world, and it shows the profit. Your balance sheet is where all the magic happens. Your balance sheet shows you your assets, the things that the business owns and that it uses to produce cash or produce whatever is doing. And then you have liabilities, which is whoever is all the other people that are not owners that actually own your business, right? Liabilities are not just debt. They are all the other people who are not you and the owners who own your business. They have a stake in it. Then you also have equity, which just shows your ownership, right? So the difference between a profit and cash, why you're highly profitable and why there's no cash in your bank account, is simply because the cash that the profits are actually generating, you're using it to actually pay down some debt. That can be one reason. You're using your cash to pay down debt. But what you don't know is that debt payments are not a deduction. They're not an expense. They will never show up on the profit calculation. So you got to they would never show up on the profit calculation. So your profit generates cash, you're using it to pay debts, and so now cash is low, but profits are still up. Here's another scenario where that can happen. Let's say you have a business that issues invoices, that sends invoices to a whole bunch of people. Look, people sign contracts and sign my proposal, and they're saying that they're going to pay me 5,000, 6,000, 10,000. I signed a $30,000 contract, the highest I've ever done, right? On your profit and loss statement, guess what that revenue is going to say? It's going to say, "Oh, you're up." It's going to show on that profit and loss statement, and your profits are going to be boosted for sure. But the money had never come in yet. It's just the invoices that are out. Money has not come in yet. What we call that in accounting speak is accounts receivable. That's everything that you're entitled to. You just not haven't received it. That's a big issue for a lot of our project-based businesses. The timing of when they actually receive the cash versus when they send out the bill. Imagine if you sent out, even if you sent out like 100K invoice, right? You're expecting 100K. Let's say it's now tax time. You have 50,000 in profits. The profit is going to be taxable, not this fact that you got cash in it. Most times. Most times. Now, I got to inform you because there's so many things that are nuanced in accounting and in tax that it can just be overwhelming. But most businesses don't actually operate in that story that I just mentioned. Like, though you didn't get the cash, doesn't mean that you actually pay the tax on the profit. There's a major, 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 major concept that is actually a big determinant in your taxes and your financial performance is what we call accrual basis and cash basis of accounting. Cash says anytime cash comes into my bank, I'm going to recognize revenue. And anytime I spend cash, that's the only time I will recognize an expense. Accrual basis is just the opposite. Is when I send invoices or when I receive bills, that's when it's recognized. When you understand that just a little bit, even if you just understand that there's a timing and whichever one you want to use, it actually can be used as a strategy for tax savings or tax shifting simply because you're changing when you're going to recognize that profit. Cool. So those are reasons why you can feel so profitable, but you're strapped for cash and you have no idea where it went. Other reasons is that that profit was used to pay taxes, the last year taxes. And that's another story. That one hurts a little bit because it's like, why are all my profits going to tax people? Man. And isn't that the concern we have all the time? Like, man, why is all my profits going there? Well, we'll talk about that a little bit later. Let's look at another question. It says, I got a question from a Matthew Smith. He says, given my current revenue, overhead, and access to union labor, what financial structures or funding strategies would you recommend to me to scale from 130K to 500K in annual revenue, especially with limited savings, poor credit, and no payroll reserves? Okay, that's a good question. I mean, I have to make some assumptions. You said current revenue. I don't know what your current revenue is. You said overhead. I don't know what your overhead is. Access to union labor. Maybe you have cheap employees that you can hire. Okay, and what financial structures or funding strategy would you recommend for me to scale from 130 to 500? So it really is going to depend on the industry and what you're doing, like your own business model. Now, the interesting thing or the thing that you have to understand is that every business model works a little bit differently. And it's not just the business model working itself, but also the situation that you find yourself in. Somebody who has the cash to bootstrap their business from the ground up is a little bit different than somebody who needs the debt in order to get it off the ground. They have different problems that they're trying to solve from day one. So scaling from 130 to 500K, it tells me at least that you've scaled from 130 to 130. Now we got to judge the quality of that 130. Was that 130 like how much profit came out of that? If a reasonable amount of profit came out of that and you didn't actually take on any debt prior to that, for me personally, I'd probably coach and encourage you to continue going. Maybe it's not even time to bring on some debt. Or maybe it is because you're trying to go beyond that 500. You're trying to get to maybe 5 million. Maybe that's one of your goals, 5. And so you need funding to actually accelerate your growth. When I say funding, I am saying debt. But you don't always need debt to scale. Sometimes you can use other people's money or investors, right? or not traditional lending debt, you can find other off market debts to help scale your business. But what I want to tell you and coach you on is that if you don't already have a viable business model, if you haven't solved that equation, offer minus fulfillment minus management equals actually a profit, and you're still experiencing some losses, debt can exasperate that very quickly. You got to have a solid model before you start introducing additional risk through debt. This might be a hot take when we're in a world where people think that debt is a substitute for income because all the rich people do it. It's great when controlled and you know what you're doing, but you have to have something that works in order to put fuel into it. And that's kind of what debt does. So if your business is hinged off of debt payments, in my humble opinion, from what I've seen, if your business works only because there's debt, you don't have a good profit model. You don't have a good business model. You need to improve the model. You need to work on each of those departments so that the profit is not only covers the debt payment, but it also covers more. It allows you to reinvest into it. You don't want your business working for the creditors. You own your business. When your profits are always go to debt payments, that means if it all goes to debt payments, that means you don't work for you. The business doesn't work for you. You work for those creditors. So you want your business to work for you. All right, I see some questions in the chat. We're going to talk about some of these. I see Patrick and Written Vision having just chopping it up. You guys are having a good time. All right, all right. Let's see. How do I make sure my business isn't affected by the current trade situation? He put two A's in there for situation. Oh, that's that's a great question that has a million layers on it. A lot of layers on it. But let me answer that question in this manner. It's really the answer to all these questions honestly is depend. It depends. And it really just depends on your industry. But let me just shoot and give you some things to think about. So one, if there's a current trade situation, it depends how close to the trading activity are you? If I'm a manufacturer and I source materials from one of these countries that are affected by the trade situation, the ways that I source and my thoughts around my sourcing of my raw materials is going to change. Maybe maybe I start thinking about where I'm sourcing more strategically. If there's a location that's getting tariffed, right? I need to start thinking about, are there other alternatives to source my product? Maybe there's risk. You know, when you're manufacturing, there is absolute risk when you're sourcing your material to create your product that is wildly popular, and there's risk when you have it all focused in one place, in one bucket, one basket, right? Can you imagine like your whole life? That's almost, I don't know if any of you heard this, or that's almost like having all of your eggs, like your business is hinged on just YouTube, right? Or just Instagram or just TikTok. It's great when it produces and it becomes reliable. But once a trade war happens, a tariff happens, you're at the mercy at whatever platform you've put all your eggs in. So as a manufacturer, I would say spread out your sourcing. Maybe there's another country, another place that you can source some of the same material, different cost structure, but same quality from a different location. That's what probably going to be your best bet in navigating through this time, because you can't predict that. You can't really predict all the things that are happening. The other thing is that if you're so lucky or maybe so fortunate to be in the manufacturing space, I think that because of like the results of the tariff, manufacturing spaces might actually be a booming market in the US. Now, it may cost goods that come out of the US to still be expensive, but there might be an opportunity for certain types of goods and products. Now, I would challenge you to go and do some research and figure out, okay, are there products that work economically even in the US with all of these tariffs? There may be. I would actually think that premium price products might be something that could be produced in the US at lower profit margins simply because of how the market is made up. So I would investigate. If I were you and I was in manufacturing, I'd probably do a research study around that. What are the products that U.S. currently relies so much on from China that could be viable to be produced in the U.S.? You crack that code, I promise you, you're probably going to tap into a gold mine because all of the retailers are going to start looking for US based manufacturers. I'm just saying, I'm just calling it. I don't predict the future. I just say things about it. All right, next question. Zoe, question from Patrick. Okay. We used to invoice after services at net 30 and it meant we would get paid 60 to 90 days later. Then we billed on receipt and would get paid 30 to 60 days. We're trying to switch to payment upfront, but still want to be able to charge an hourly overage. Do you have any advice on what to do to make sure we can pay our employees without risking non payment? So, I'm going to tell you a story in my journey. It was a few years ago, and somebody came to me with, um, they came to me basically the last week for taxes. When we evaluated their situation, they had multiple years of back tax returns that they didn't file. They came to me with like as if they ran through the door sweating and breathing hard. So it was very urgent because the deadline was like now. And I have a servant's mentality in that I really wanted to make sure just to take care of our people. Those three things happening all at the same time resulted in me and my team spending the next few days, even honestly, like a month or two, because we had to liaison and talk with the IRS because some of their situation wasn't so clear. It led my team to spend all of that time doing the service, resolving their situation, filing their tax returns. We filed the returns, right? Then we sent the invoice. I tell you, once that invoice was sent, the money was never going to come back. The money, I was never going to get paid. The client saw it and was like, "Whoa, it cost this much for you to help us? No, wait, that can't be." And here I am like, "Oh my goodness. Like I sent you the invoice. We did all of this work. You're not going to pay it?" So a day goes by, 2 days go by, 3 days go by, and each day I'm like, "Oh my gosh, I don't want this to be like I'm sweating a little bit cuz I also have to pay people. We got other things that we got to pay." Now multiply that effect by let's just say like 100. If we did like 100 tax returns like that. This is a real situation, but multiplied across 100 tax returns or 100 clients. Literally at that moment, to me, it felt as though we were at the mercy of whenever of their payment schedule. And a lot of people only want to pay when they feel like paying. Even if you send a net 30. I've sent net 30s, I've sent net 15s, I've sent net 5s. And then you're expecting that they're going to honor it, right? But a lot of times, oh my goodness, like you're still on edge. It's like, hey, my goodness, are you going to pay this thing? Are you going to pay this thing? Praise God. Luckily, they did pay. It took a long time, but they actually did pay. But not without me losing out on stress. So I should have charged them more because the stress that I wasn't even anticipating. All right. Why do I tell you the story? I tell you the story because I have learned that in these service type of spaces, and I know your business, right? These service type of businesses, once you switch from the I do the service, you pay me later to you pay me, then I do the service, your stress level goes way down. Your value in the eyes of certain clients actually go way up. And because you know you deliver on the thing that you do, and I'm assuming you deliver at a high quality, your reputation goes up. So I think everyone wins when you have integrity in that environment. And I say you win, your people win, everyone around you wins. So I personally will advise anyone, especially anyone that's not doing a service that costs like 40,000 like upfront or something. And even then, there are people who will charge that full upfront because you don't want to get into it sucks to be in a situation where you're chasing the money that you already earned, but the volume or the size of that dollar is not even worth it to go even sue or to go other ways to collect on it. Like that sucks. So maybe the only time that I actually would send invoices and be paid later is if the price is premium or I'm working with maybe a government institution or I have a very solid relationship with the client. And that only can be solid if you've already paid me. Like you're a client that typically pays me on time and you've been paying me and maybe you just need a break or something. Maybe I'll send you an invoice. But for the most part, even the clients that work with us on a monthly basis, we're taking their card information up front and we're charging it ourselves. If you do that, you charge the cards up front yourselves, you're going to secure your cash position and that AR, all of that stress just goes out the window. And now you can focus that attention on things that actually matter and what's going to grow your business. Cool. Hopefully that answers your question, gives you some good advice. Yeah, you do got to get it switched up for all the clients and you got to have that conversation. I remember when I transitioned to that, I literally set up meetings with my clients to talk about it. Um, and the ones who have been getting great service did not bat an eye. They were like, "Oh, okay, sure." But the ones who who are bad buyers, they're the ones who gave a lot of pushback, but we ended up switching them over. This story actually just that actually brings me to a point that it's a thing that I'm learning now more recently is this idea of you must be the better buyer that you are, the better seller you can be. What do I mean by that? That means that how the your framework, the method in which you make a purchase allows you to shift your framework and the method in which you sell the product or sell whatever that you're selling. If my buying habits are all tuned to what's the cost? What am I missing out on? What am I losing? Right? That same habit mentality can carry over to your sales where you're focused on trying to appease a person's insecurity about paying. Like money becomes the topic of the day instead of the value that's being provided or the transformation that is being provided or the problem and the solutions that are being provided, which is the whole point of the value exchange in business. So if I switch my mentality to, all right, I need to buy with value in mind. I want to buy because this thing is going to solve the problem that I'm coming to solve. Will that make you spend a bit more? I think so. Perhaps, maybe, yeah. It doesn't mean I'm throwing out, costs altogether. You have just a baseline concern about cost, but what you're actually trying to solve is the problem. Like you're trying to get the value out. So if I buy with that mentality, I think I'm believing, and I actually have seen it, that I can sell with that mentality. I'm not selling you a cheap price because cheap means better. Cheap does not mean better. I'm selling you the solution to your problem because the solution means better. Like, you can buy a cheap thing if you want to, but that does not guarantee your problem is going to be solved. So we're selling solutions to problems, and our reputation increases the likelihood that that problem is going to be solved because we've done it before, and we'll continue to do it by God, as God will help us. Cool, cool. All right, all right. That was a great segue. Great question. Cool. All right, let me answer. Let me look and check out some other questions along the way. Hmm. That actually answered that whole digression. Just answered a lot of questions. How should I price my services? What should I? Oh, I love this question. This is a lot. It says, "What strategies?" This person said, "What strategies can I use to scale my business without losing control?" I would even say scaling means like to grow to grow with control. Man, there's a lot to say about this, but I think that the quality of your systems and the foundation that you set is really going to dictate where you scale, how well you scale. Um, yeah, where you go and how well you go. I was listening to a video by an Alex Hermosi. He recorded it many years ago, but he was describing like structures. He actually showed structures, and one you can I think he may have done cups. Like, if you have cups and you're trying to stack cups, and let's say you're stacking them upside down, right? If you stack it real tall in a straight line, and you get it right, and you just step back, one small breeze, somebody walking by, that thing is gone. The structure is gone. The cups are gone, right? But let's say you actually, instead of stacking it one wide, 10 high, you decided, I'm gonna stack 6 wide and then 3 high. We're still dealing with cups, but a 6 wide base with 3 high is a lot more secure than a one base, a one wide, 10 high kind of cup. In fact, the funny thing is, as you keep stacking, and if the goal is, let's see who can get the highest the fastest, the the single wide cup that goes high will grow very fast because you'll just be like, go, 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 go. You'll get high. But along the way, every time you kind of do it, the cups are eventually going to fall because they don't have a good foundation. And in fact, there is a terminal height that they will always reach, that they will always fall at. They wouldn't be able to withstand the wind or the air up there. But if you had a 6 wide and you kept going, no matter how slowly it actually took to grow tall, grow tall, grow tall, every stage of growth is solid. It can withstand the air up there. The wind as people go by, it actually is stable, right? So I would say, if the goal is 10, to get 10 high, and the first cup stackers are fast and they're only able to get to 7, and before they fall, they get to 7, fall, 7, fall, 7, fall, and they get to 7 in 2 years, right? But then the stable cup gets to 7 in 5 years, but the goal is 10. Let's say it takes the stable cup to get to 10 in 10 years. Let's double it. Let's say the 10 years. Who got the 10 the fastest? not the first layer. They didn't even get there. They went fast and fell short. But the one who built the foundation, stability, who built the infrastructure, that is what actually took it and it actually reached the goal of 10. And the fastest way to get to that goal is actually to get it. It's actually to get there. Sometimes it's a slow, steady thing that actually gets there, but you need to build structure. That's why financial management in that equation is super important, because it is one of the fundamental ways that you can add in structure into your business. That management department, led by your CFO, it includes all of your bookkeeping, it includes financial reporting, it includes all of your tracking of your numbers and your indicators that tell you whether or not you're doing the things right and it's actually producing the result you're looking for, which is the profit, right? Cool. But more practical ways, how do I scale without losing control? You become a better leader. I spoke about this earlier today my on my Instagram story. And I said that the process of of scaling your business, the journey of business is often a journey of becoming. Like, it's about who you're becoming in the process. So if you're not growing as a leader, as an owner, as a manager who can manage offers, fulfillment, and management, and a decision maker, right? Your business could grow to a point where you do lose control simply because you're not equipped to be the leader of that thing, to manage that whole thing, which is why it's important to grow in yourself. If you're not a lifelong learner, you don't have the willingness to grow, you will lose control. And that's essential. That's all it really is. You have to be a great leader. You have to grow in order to be able to build the capacity in your business. You build capacity by those three things that we mentioned earlier: the people, the process, and the platforms. Let's throw in leadership in there because you have to, yeah. So, as a leader, you have people you got to manage. If your people are organized, if your people believe in you, if your people are inspired by you, if your people are held accountable by you and your team, do you have people to help you do all those people management things, right? You got to start thinking with structure first. That's how you don't lose control. How else don't you lose control when scaling your business? By solving problems with systems rather than with band-aids. Most people solve problems every time they come. A problem comes to you, you figure it out, you rally, you solve it, and then you walk away. A lot of people do that. A lot of owners do that. And they think that they're great problem solvers because they solve a lot of problems all the time. But what they don't realize is that they're solving like the same problems over time, all the time. And problems will always multiply. Like, the types of problems, each problem already will multiply in the quantity of them. And then the types of problems are going to keep multiplying, especially as you scale. And there is a terminal point where you just cannot solve all the problems. So if your approach to solving problems are, problem comes to me, I solve it. Problem comes to me, I solve it. Or you just settle it, you're going to lose control of your business and you might drive yourself insane. So how do you actually solve problems? That type of person is not a good problem solver. They're a good worker bee. How do you actually solve problems well? You solve problems through systems. Systematically solve problems so that the problem is solved all the times the problem will ever come up in the future. You got to be solving future problems before they even present themselves. That's how you don't lose control. You think in systems, you think in processes. You got to think, how do I solve this problem one time and it is virtually forever solved? How do I look into the future and see what are the problems that are going to come up because this problem has been solved? Okay, resolving this is going to create problem C, B, X, Y, and Z. Can I think about that ahead of time and solve all of that right now? Calling it compound solving, pre solving. I'm telling you, if you think like that in solving the problems in your business, you as one person will become so powerful because you've solved a lot of problems that people that have become perpetual to-do lists for people as they come through. When you grow your business, especially as the owner or leaders of those departments, your goal is not to create a your goal is not to create a call center where you're always answering the phone because problems. Your goal, your objective as the owner is, how do I come into my business and solve problems once and for all? If you're able to solve problems once and for all through processes, through having explicitly written, recorded processes, through people, hiring qualified people who know what they're doing and match with the vision of the company and are able to execute through platforms or softwares that empower and just make the whole process run smooth like butter and solve for the deficiencies of people, software empowering the people, then that's a person that's solving problems. You do that, you'll solve great problems. You'll be the great problem solver, right? And the quality of your business will improve dramatically, and you will not feel like you won't feel like your business is beyond you. So you're not losing control too early. Because what stops a lot of businesses is that they don't actually have the ability to scale to a default level to get to that first checkpoint for, exponential growth. Like for Matthew, yeah, for Matthew, he's trying to go from 130 to 500. If the systems are not in place well, he's going to have a hard time going to that 500. In fact, he may feel like he needs to bring in new help to just go from 130 to 500. Maybe you do. I don't know exactly what's going on in the business, but I can tell you that with smart planning, implementing systems, processes, and software or platforms, and you are the people, the person. Maybe you're solo, maybe you have a few people, but you can optimizing in those areas and maximizing the outputs and performance of that person. You'll be able to go from 130 to 500 by yourself or with just a handful of people. Okay, maybe 500 is a little bit ambitious, but maybe like 2, 3. Definitely 2 for sure. You're right there. You just got to start thinking about certain things differently. So that's how you scale your business without losing control. When you get to different levels of scale, the problems become different and the solutions become different. Yesterday, I was on a panel discussing, I was with the CCL Legacy Group in Baltimore, Maryland. We were out at Johns Hopkins University at the Carey Business School. And the topic that kept coming up was partnerships. Partnerships. And we had people in different markets or different stages in their business in the room. Some were starting, some were serial entrepreneurs, some were like myself. We built it from scratch, and so we're growing. Some were basically like an institutional investor or venture capitalist who saw businesses scale at different rates and at different stages. And what we learned is that all business, once you get to a certain point, you absolutely need partners. You absolutely need partners, and you can't scale past places without bringing in other expertise. All right. He gave a threshold number, 2 million a year. You're likely going to need another partner, some other type of expertise that comes into the business to take you from 2 to 10. Going from 5 to 2, You may not need that partner, but you need different types of partner. And when I say partner, you need to understand me. To scale from 2 to 10, you might need equity partners. That's what I'm talking about. You might need people who have equity in the business. They have a stake in the game, and so they push in a different way. But maybe from 5 to 2, you're not looking for equity partners. You might be looking for financing partners, people who bring in capital through debt. You might be also looking for strategic hires, contractors, employees who bring a different level of output to your business. Those could be quote unquote partners. All I'm trying to say is that at a certain point, you need good people to help you actually scale to where you're going to go. But here's one of the most important pieces that one of the panelists mentioned. It's very critical. And we all intuitively already know this, is that you want to be a high performing partner because partners really only work with other high performing partners. Have you ever been in a group project and your teacher in school assigns you to a group project and it's like 5 people on the team, but literally only 2 people are actually moving, driving a bus, doing all the work, organizing, coordinating everybody, and then you have one person who usually is like 6'5" and it's on the basketball team, just kind of sitting there. No shade on the basketball team, but you just have one person who's usually not pulling their weight. At the end of the project, someone is writing the names in order, like whose name should be on the project. And so the people who did the work are putting their names first. They want the credit. They want the teacher to recognize them. It's the same way in business partnerships. You inherently want to work with those people who do the work, who are high performers, who want to actually get the result of the efforts that they're putting in, and their actions actually, reflect that. And so at certain stages in business, you need to find high performing partners, whether it's lending partners, employee partners, contracting partners, or equity partners. There's going to be an expectation, a necessity, or a requirement that just says, all right, I have spent my time becoming a high performer, and now I need to partner with another high performer. But you got to be a high performer yourself first. Can't be looking for high performers to ride the coattails. You got to be that first high performer. You got to be somebody that somebody can look to and say, man, I want to work with that person. If you're that person, when you want to work with somebody else, they will consider your offer more seriously. Yeah, man. So I love this session. We talked. Um, we learned a lot. I hope you learned a lot. I learned a lot by just talking. Thank you for those who submitted their questions, to those who engaged with us. We're going to try to be offering these every Friday. Honestly, 3 p.m. is a good time, isn't it? Because right after 3 p.m. is 4 p.m. and that's the pickleball time, right? we probably will keep doing this every Friday. I like 3 p.m. so I'm gonna keep it going unless it doesn't work. But tell me what you thought. What is your biggest problems that you're solving in your business today? Put it in the comment section. Even if you're watching this on the replay, put it in the comment section. I would love to gather your questions and talk about it, have a discussion. This was a wonderful time. And with that being said, again, I'm Zoe. I'm owner of Zopia. We're a fractional CFO firm, right? We help you turn your successful business into a generational wealth building machine. We teach you how to master your cash flow and how to scale your business and implement real principles that actually scale. All right. Thank you, everybody. And with that, we're out.